been a while since I've done one of these. Okay, good. Not too many people, so I'm not too nervous or scared. Forward-looking statements, that must have cost us a lot from a lawyer. Just before I get into this, I want to just talk a little bit about copper, and I was just on a panel then, so forgive me if you've already heard this, but you must own copper projects now. And the reason being, I think, you know, copper's, I like to say $30. It's a bit puffish, but I honestly believe that copper's going to go to $20 in this next cycle. The reason being, and there's precedent for this, recent precedent. When I left, when I was at Rio Tinto, they sent me to Chile in 2002. I joined Rio Tinto in 1999. We had copper was trading at about 71 cents. We had to put it in our models at 71 cents, diminishing a year to infinity. Now, by the time I'd left Chile, the copper price was about $2, and that was in 2004. And then by the time I left Rio Tinto in 2007, the copper price was $4.60. So there's recent precedent for the copper price going up 5 or 6 times from its starting point. Now we're at $3.80 today. And of course, the driver for that change in copper price was a very large but localised phenomena, the urbanisation of a good chunk of the Chinese populace. Well, this time round, what we're seeing, of course, is a much larger demand driver and a huge change in demand. And of course, that's against a backdrop. It's a global phenomenon, the electrification of the planet, and that's against a backdrop of under-exploration, under-investment in development, and under-investment in permitting. So it's a hell of a lot harder to get a project off the ground. So I think that these drivers will see huge changes in copper prices. You know, you don't have to take it from me. Goldman Sachs and other very learned companies are saying that we're going to see $8 to $10 copper price in the not too distant future. I think it's going to be much bigger. So you must own copper now, and that's what we've been doing at Inventor Capital and Vizsla Copper, trying to put our foot on as many good quality projects as we can in good, stable jurisdictions. So we've done that here. We started the company. We spun it out of Vizsla Silver a couple of years ago. We scoured the globe, and this is another pointer for you. You know, we've been looking around the world for about 4 years for quality copper projects, and I'm telling you, there are not many out there, and not many that are going to be developed in a time frame that can supply this sort of new boom that's coming. So that was one of the learnings, but we were very fortunate. We did a couple of deals. I see Shane Ebert in the back of the room there. Shane, we became the major shareholders in a company called Surge Copper. We love British Columbia. We think it's a great, stable jurisdiction to build copper projects and indeed find copper. So we invested in Surge Copper, and in the meantime, we came across a property called the Woodjam property that an old prospector and geologist called Bill Morton had been working on for 30 years. Now, I was thrilled to get this, having sort of spent 2 years in Chile with Rio Tinto and then a couple of years looking for across the Tethyan Belt with Rio Tinto in China for porphyry copper deposits. What I saw here really intrigued me. Now, before we get into it, we've put out some drill results yesterday. We put out 66 metres at nearly 1% copper equivalent. So we know there are higher grade copper projects and deposits in British Columbia, and I think that we've got probably a couple of those here. So look out for more results coming soon. But the Woodjam property, it's in central BC. It's near Williams Lake, a fantastic part of the world to explore and develop projects. It's just south of Mount Polly, so we're surrounded by some of and Gibraltar, I should say. We're surrounded by some of Canada's largest and best copper projects and copper mines. But we're just in the process. We're on the last 2 drill holes. Sorry, my phone's going off here. Last 2 drill holes of a 18 drill hole program. We've drilled 8,000 metres. We've got these are the first assays. Assays are a little bit slow at the moment, taking 4 to 6 weeks to come in, but we're getting some good numbers out of these projects. What I am impressed with is that this drill hole here had 293 metres at 0.6% copper. So very, very good result in anyone's terms. And there's more of that to come. I've just got. I was at site a couple of weeks ago, and I'm pleased to report that the core we saw there was pretty spectacular, and I think we've got some more good numbers to come over the next couple of months as those assays come in. So look out for that. Now, I've talked about the market and the macro picture and the like, but I think you don't have long to get set in this. I think we're going to see the copper price has traded pretty well, but you want to be in the market now and certainly over the next 12 months, because I think that this bull market is really going to kick off at the back end of this summer that we've just enjoyed, and we're starting to see things pick up. I've talked about the fundamentals of copper. And why we think that copper is going to north of $20 a pound. I know Robert Friedland agrees with me. He's talking about $20 to $30 a pound copper as well. Now, just to zoom into the project here and show you where we're at. So again, central British Columbia. The thing that sets this apart for me, I've been doing porphyry exploration for over 20 years now. I've been involved in a few porphyry discoveries, but it's rare when you put your foot on a property, even in Chile, the conversion rate of target to discovery is usually very, very low. Now, Bill Morton and his team, what we found when we hit the ground here is that of the sort of 7 or 8 targets that they've tested over time, they've discovered 6 distinct porphyry centres. Very unusual outcome. Conversion of discovery of target to discovery like that is the likes I've never seen before. Now, we've got over 100 new targets. We've completed a MAG survey and a ZTEM survey over the property. 100 new targets to test. We're going to test one new one on this program that we're doing now, but we're going to be here for a hell of a long time testing new targets, and I think our chances of discovery are very, very high. And if you've ever heard me talk about this, you know, the exploration process and the way we look at exploration, we rank projects and properties and targets on the basis of size of the prize, cost of the test, and chance of success. Well, here ticks all those boxes. You know, we're looking for a Mount Polly-like deposit or a New Afton, 1% copper. We've got evidence of those there. Cost of the test, very cheap place to operate. I think our drill costs are about $300 a metre. It's one of the cheaper places on the planet to get in and drill. We can drill year round, and that's very important, so we'll kick off another campaign late this year and continue the exploration program going there. And chance of success. Again, as I say, the conversion rate of target to discovery here is of the likes I've never ever seen. So I think we're, you know, in addition to those known deposits, we'll continue to be hitting mineralisation there for many years to come. Money's coming back into British Columbia. I know BC's sort of had a bad rap over the years. I'm heavily involved in Skeena Resources and the lead director of Skeena there. You know, what we're finding is that you can get projects and drill programs permitted and mines permitted and developed as well. So we love BC. We think it's the right place to be. A little bit about the regional geology. This Quesnel magmatic arc is a fascinating thing. You know, as I say, BC porphyries get a bad rap for being low grade, but if you look at some of those numbers on that slide there, you'll see New Afton, 41 million tonnes at 0.7% copper and 0.7 grams per tonne gold. We know they're out there, and I don't think we've done enough geological work to understand all of this, and probably not enough drilling to test this, and that's one of the things we'll be doing here. This is a project, so the Woodjam Project, Bill and his team have owned this for over 30 years. Unfortunately, they haven't been able to raise money, so they've left a few dripping roasts out there for us. Goldfields, it was one of their top 2 exploration projects globally up until 2013 when they pulled out of the project. They spent over $30 million there, drilled 120,000 metres. They tried to hold on to it, but the downturn got the better of them. And since that time, Bill and his team have drilled 15 drill holes in the past 10 years, so there hasn't been much work done. Very importantly, we acquired the project for $11 million. It's already got a large resource. There's about 1 million ounces of gold and nearly 2 billion pounds of copper. One of the things that we'll be doing over the next few months is looking to expand that. Of the drilling that's been done in recent times, and you can see some of those numbers there, 51 metres at 1.6% copper and 0.8 grams per tonne gold. At Deerhorn, 110 metres at 2.6 grams gold and 0.44 copper. None of those drill holes have been factored into that resource base yet. So there's an easy win for us to upgrade that existing resource base, and I think we'll be doing that very soon. But the drilling that we're doing now will continue to expand that resource base as well. So I'm excited for those results. You know, very importantly, and I think the big takeaway from this presentation now is that we've got been drilling on all of these existing deposits, extending the high-grade zones. So we've got assays to come back from those, and I think you'll see some pretty positive news coming out of the project over the next couple of months. So now's the time to get set. Some of the other key things on the project, you know, Deerhorn's one of my favourite targets here, favourite projects. It's been sparsely drilled. There's a sizable resource there already, but you can see some of the drill holes from the historic drilling, 123 metres at 0.4% copper and 2.5 grams per tonne gold. I think, you know, some of the core I saw up there in recent times looks similar to those higher grade drill hits that have been there. So my expectation is that we should have some really good news coming out of this. But what hasn't been done on this property is a good geological model developed around these high grade zones and the high grade controls on the structural controls on these high grade zones. So very simple task for our team. We've got some fabulous geologists. Keith Bodnachuk and Chris Lesler in the back of the room there. They're looking very, very carefully at how we can pull out a higher grade resource from the project. And what I'd love to see, and what we're ideally looking to do here over the next couple of years, is I think at the end of the day we're going to have a massive resource of that lower grade material, 0.5% copper. There'll be billions of tonnes of that on this property. But what I'd love to see is 100 million tonnes at 1% copper equivalent. And certainly we've got drill holes in there and a higher grade domain that hasn't been pulled out of the resource model yet, and I think we're well on our way to establishing that. And if we do that, we've got a project that we'll be building, and as a proud British Columbian, I'll be looking forward to building one of the best new copper mines in the province. A little bit more there. One of the interesting things that came out of this is that when we did this MAG survey, you know, as I say, I've been doing copper exploration for a long time, and you know, it's rare that you see so many of these classic donut-shaped anomalies that are associated typically with magnetite destruction around a porphyry centre. Here we came up with 102 targets, so we've got a hell of a lot of work to do to pull these apart and rank and prioritise each of the targets. But as I say again, you know, the conversion rate of target to discovery has been phenomenal so far. So I think there's a lot more to come, and we'll be continuing to raise money and drill holes for many, many years to come. A little bit about the team. You know, Chris Donaldson's in the back of the room there as well, our CEO. Mike Connett is the director. Simon Smirlak, who sits on the board of both Vizsla Silver and Vizsla Copper, is an important person to mention because, of course, you know, Simon's the COO of Ausenco Engineering. He's probably built more mines than I've visited. So we've got the full capability to advance a project from exploration through to development. Just quickly, lastly, we've pretty tight share structure at the moment. We've got 107 million shares out. Fully diluted 126 million shares, trading pretty well. I suppose one of the sort of pointers to me that suggests that this market's finally about to turn. We've been in sort of the worst conditions I've seen in many, many years. But when we put these drill results out yesterday, our share price popped 10%. Vizsla Silver put out some spectacular drill results as well, and Vizsla Silver's share price was up 10%. The last time we put out positive drill results, Dave, our share price went down about 20%. So something's changed in this market. So I think now's, we're about to finally see a return to positive markets, and for explorers doing good work, we're going to see people getting rewarded for it. So we're in good shape on that front. We've got about $3.5–4 million in cash at the moment, so we're not come a raise anytime soon. Although we'll certainly want to do more drilling in the coming couple of seasons. So look out on that front, but we've got great access to flow through. I should also mention I've put over $1 million of my personal capital into the company over the past year. Continue to support it heavily myself. I love what we're doing. I think the chances of further discovery there at Vizsla Copper, at the Woodjam property, are phenomenal. So I'll continue to invest along with all of our other shareholders on the property. Thank you very much.
Thank you, Craig. Time for one question from the floor. Yeah, we're right here. Right here.
Craig, I'm wondering, is there a critical mass of resource you kind of have in your head that would give you optionality to be, say, a takeout target or to just advance the project to production? How do you think about it?
Very, very good question. I think, we'd have a project, if we could come up with 50 million tonnes at 1%, that'd give us about 500,000 tonnes of copper equivalent. You could build a modest copper mine on that, 25,000 tonnes per annum, for argument's sake. So to my mind, that's the minimum target for us. We're not far off that now, I think, based on the numbers I'm seeing. But 100 million tonnes at that sort of grade, that'd be a fabulous project, I think, and something that other companies would be interested in. I should say that we're not really interested in selling. I love to build projects, and we want to be there for the longer term. But if you think copper could go to 20 or 30 bucks, you want as much metal as you possibly can. I think here we're going to have, potentially over 1 billion tonnes of ore at that sort of 0.4 or 0.5% grade over time. I think when copper prices really take off, that's going to be of interest to any of the majors or any company. So, we've got a small target, a modest target that we can bring into development, but a bigger vision there as well. Thank you all. Thanks, Dave.